tone do you expect Jerome Powell to adopt in today's press conference? We're in this strange situation where equity markets have marched to record highs while the macro data suggests that the real economy has deteriorated and the vaccine rollout is a lot slower than many had hoped.
Right, and the link between markets and the economy is probably actually the Fed that is really dovish and has committed to keep rates low for a while. And now to come back to today's press conference and today's Fed decision, I would expect Jerome Powell to commit to not reducing asset purchases for several months, and I would actually expect personally, the reduction in asset purchases not to happen before early 2022. So we still have a lot of accommodation in the pipeline.
Now, Thomas, my next question may be a bit of a stretch, but I'm curious if you've got any thoughts. We were discussing the role of retail investors and the rising influence they're having in U.S. markets, in particular with GameStop getting a ton of attention this week. From a policy perspective, do you think that the increased involvement of retail investors may actually make the Fed more reluctant to do anything that could negatively impact markets, given what Main Street has at stake here?
Yeah, it's quite interesting. I mean, this link between Fed policy and financial stability. But I think Jerome Powell will be very clear, and he will likely say that he's not going to use rate hikes to combat or to calm down this activity we're seeing in financial markets. However, I would expect a strong debate within the Fed. We know that some regional Fed presidents are starting to raise the alarm, and they are seeing, they're a bit, say anxious or a bit worried about the fact that valuations in the stock market are starting to go up a bit too much versus fundamentals. So I would expect, yes, a debate within the Fed to take place. But however, Jerome Powell to be very cool-headed about that and still say that rate hikes are still very much in the future because his priority is to really help and support the economy in the long run.
Thomas, I've been watching the yield curve very closely as a litmus test for how investors are thinking about the inflation outlook. And we saw into the beginning of this year a massive steepening take place, a big sell-off in yields, but things have started to turn and the 10-year note looks like it may actually break through 1% again, but this time to the downside. What do you say about the reflationary trade here? And do you actually believe that the second half of this year we could see the demand type inflationary pull that people have been talking about?
Yeah, so 2 points about that. One is that I'm not in the reflation camp in terms of expecting a big surge in inflation later this year. Yes, there will be a peak in inflation in the spring due to base effects, but I think after that, the high output gap, the fact that the unemployment rate is high, that should mean inflation come back down, especially core inflation. So I'm not worried about inflation at this stage. Point number two is that regarding the yield curve and long-term yields, I think we have a threat in the near term, which is these new variants. By the way, the English variant is in the US. They've also found the Brazilian variant and all other variants, and they are more transmissible. So I would expect the virus risks to be still very much prevalent in the near term. So macro data could stay weak, and I would expect actually Q1 GDP growth in the US to be negative. So that could be another hurdle for further escalation in long-term yields in the very near term.